A man tried to write off his girlfriend as a dependent. Another person claimed their dog as a security system. And one absolute legend attempted to deduct a medieval castle. These aren't jokes. These are real tax deduction claims that made auditors question humanity. I've dug through court records, IRS reports, and tax authority files from 6 countries to find the 30 dumbest tax deduction attempts in history. And number 14? It involved a yacht, a pastor, and the most creative interpretation of religious studies you've ever heard. Let's count down the financial fails that prove some people have more audacity than sense. Starting strong at number 30, in 2008, a couple tried to deduct $12,068 for cat food, claiming they were running a non-profit cat rescue. The IRS discovered they had 2 cats. 2. That's $6,000 per cat. They were either running the Ritz-Carlton of cat shelters or, and stick with me here, lying through their teeth. The tax court didn't buy it. Case dismissed. Number 29 takes us to the UK, where a taxpayer attempted to write off a £3,000 tanning bed as a medical expense because their doctor mentioned they had vitamin D deficiency. HMRC pointed out that, and I quote, "Sunlight is free." The deduction was rejected faster than you can say melanoma risk. Claim 28, a Canadian businessman tried to deduct his $80,000 in-ground pool as a medical expense for hydrotherapy. The Canada Revenue Agency asked for documentation. He provided a note from his chiropractor suggesting swimming. The CRA responded, "A community pool membership costs $400 a year." Deduction denied. The best part? This guy's backyard pool had a water slide. Very therapeutic. Australia enters the chat at number 27. A exotic dancer tried to write off breast augmentation surgery as a work expense. The Australian Taxation Office actually allowed it, ruling that they were tools of trade. But our claim involves a different person, a regular accountant who tried the same thing. The ATO's response? Unlike the exotic dancer case, your employer does not require you to have these. Tax court documents describe this as an ambitious attempt. That's government speak for nice try, genius. Number 26. An orthodontist tried to deduct clarinet lessons for his child as a business expense, claiming it would prevent overbite. The IRS tax court in 1962 actually heard this case, Peacock versus Commissioner. The court ruled that preventing something that hasn't happened isn't medical treatment. That's like me deducting a fire extinguisher because my house might catch fire. Wait, can I do that? Asking for a friend. Now, before we get to number 25, which involves a wedding dress and the worst logic I've ever heard, drop a comment telling me, what's the craziest tax deduction you've heard someone try to claim? Because trust me, we're just getting started, and claim number 19 involves cocaine. Yes, really. Claim 25. A woman attempted to deduct her $25,000 wedding dress because she was a wedding planner and it was research. Her argument? She needed to experience the process from a bride's perspective. The IRS responded with essentially, "That's not how this works. That's not how any of this works." But here's where it gets better. She also tried to deduct the honeymoon to Bali as a destination wedding location scout. The audacity is almost admirable. Number 24 brings us to New Zealand, where a sex therapist, yes, that's a real profession, attempted to deduct Viagra as a business expense. The Inland Revenue Department denied it, stating the medication provided private benefits rather than professional ones. The taxpayer argued it was essential for demonstrations. The IRD counter-argued with, "That's not a demonstration we need evidence of." Case closed. Some things you just can't expense, mate. At number 23, a junkyard owner tried to write off dog food for his security dog. Seems reasonable, right? Well, the IRS discovered the security dog was a Pomeranian named Princess who weighed 4 pounds. The taxpayer argued Princess was an excellent alarm system. The IRS countered that alarm systems cost $200, not $2,400 in annual organic, grain-free dog food. The real crime here? Not appreciating Princess's dedication to security. Number 22. A British businessman claimed his £500,000 racing yacht was a mobile office for client entertainment. HMRC asked for meeting logs. He provided photos of the yacht, just photos, of an empty yacht. The tax tribunal noted that the vessel appears more suited to leisure than ledgers and denied the claim. Though honestly, if my office had a sale and a champagne fridge, I'd be way more productive. And at 21, we have the girlfriend who tried to claim her unemployed boyfriend as a dependent. Not a child, not a disabled family member, her 28-year-old boyfriend who, according to CRA documents, plays video games and sometimes walks the dog. The Canada Revenue Agency's official response was, and this is real, a romantic partner who is capable of employment does not qualify as a dependent, regardless of their lifestyle choices. That's the politest way I've ever heard someone called a deadbeat. Hold on, we're about to hit claim number 20 and things are about to get absolutely wild. We're talking a stripper's oil, a bodybuilder's tanning lotion, and wait until you hear about the guy who tried to expense his kid's birthday party. But first, I need to know, are you subscribed? Because this video gets absolutely bonkers in the second half. And if you're enjoying the chaos, hit that subscribe button so you don't miss when I cover the wildest insurance claims next week. Trust me, there's a person who tried to claim they were attacked by a ghost. Number 20. Remember that Australian stripper who successfully wrote off breast implants? Well, she also tried to deduct body oil, and the ATO allowed it. But only the oil she used at work. The catch? She had to prove how much she used professionally versus personally. According to court documents, she submitted spreadsheets. Actual spreadsheets of oil allocation. That's dedication to bookkeeping I frankly respect. Our claim here involves someone else who tried the same thing without the receipts. Spoiler, didn't work. At number 19, yes, here's the cocaine story I promised. In the 1980s case Edmondson versus Commissioner, a drug dealer tried to deduct the cost of cocaine he purchased as cost of goods sold. The tax court actually considered this. Their ruling? Even illegal businesses can deduct business expenses except illegal products themselves. So he could deduct his scale, his baggies, his pager, but not the cocaine. The IRS essentially said, "We'll tax your illegal income, but we won't subsidize your illegal inventory." The logic is insane, but technically consistent. Number 18. A London banker tried to write off his £15,000 annual commute from his countryside estate. His argument? He needed to live in the country for his mental health. Therefore, the commute was medical. HMRC's response cited established precedent. You choose where you live. The tax system doesn't fund lifestyle choices. But the banker persisted, appealing twice. The tribunal judge eventually wrote, "The taxpayer's preference for pastoral views does not constitute medical necessity." That's judge speak for get over yourself. Claim 17. A real estate agent threw his 6-year-old's birthday party at Chuck E. Cheese and tried to expense the $1,200 bill as a client appreciation event. The IRS asked for the guest list. It was 18 kindergartners and 3 parents. None were clients. His defense? Potential future clients. You never know who these kids will grow up to be. The tax court was not amused. Though honestly, playing the long game with 6-year-olds is kind of genius. Terrible tax strategy, but genius networking. At 16, a Canadian tried to write off his $150,000 Range Rover as a medical expense because he had a bad back and needed a comfortable vehicle for Canadian winters. The CRA pointed out that heated seats are available in $25,000 cars. He argued the Range Rover's specific suspension was medically necessary. The CRA asked for documentation from his doctor. The doctor's note said patient would benefit from a comfortable vehicle. That's it. No specific brand, no suspension requirements. The judge noted, this letter could justify a lazy boy recliner with wheels. Deduction denied. Okay, we're halfway through, and I need you to do 2 things. First, tell me in the comments which claim so far is the absolute dumbest. Is it Princess the Security Pomeranian, the Boyfriend Dependent, the Cocaine Deduction? And second, seriously, if you haven't subscribed yet, do it now. We've got 15 more ridiculous claims, including a medieval castle, a pastor's yacht theology studies, and the single most expensive rejected deduction in modern history. The second half is even more insane than the first. Number 15. A professional bodybuilder in New Zealand tried to deduct spray tan expenses as necessary for employment. Unlike the exotic dancer case, the IRD said no. Why? Because bodybuilding competitions represent a tiny fraction of the year, and he was getting spray tans weekly, year-round. The taxpayer argued he needed to maintain the look for sponsors. The IRD countered, "Your sponsors pay you for competition results, not your tan in December." Fun fact, the case file notes he spent $3,600 annually on spray tans. That's almost $70 a week to be orange. Here it is, Claim 14, the one I teased at the start. A megachurch pastor purchased a $3.5 million yacht and attempted to write it off as a floating ministry center for studying maritime theology. The IRS investigated and found that maritime theology studies consisted of 2 weekend trips where he mentioned Jesus while fishing. 2 trips, for a $3.5 million deduction. The rest of the time, personal vacations. The tax court ruling noted, the vessel's primary purpose appears recreational, and mentioning scripture while deep-sea fishing does not constitute a religious function. The pastor appealed. He lost. Twice. At number 13, an Australian pet psychic tried to write off expenses for her 14 pets, including 6 cats, 4 dogs, 2 rabbits, and mysteriously, a turtle, as business research expenses. The ATO asked how a turtle contributed to her pet communication business. Her response, documented in official proceedings, "Turtles have thoughts too." The ATO's counter, "Your business records show 0 turtle-related consultations." She argued she was developing her turtle communication skills for future clients. The tribunal judge wrote, "One cannot deduct expenses for a hypothetical future business that does not currently exist." The turtle was silent on the matter. Number 12. A television presenter tried to write off her entire wardrobe, 45,000 pounds worth of designer clothes, as costumes for work. HMRC has a specific test for this. Is the clothing usable only for work and unsuitable for everyday wear? She was wearing Chanel suits and Louboutin heels. The tribunal noted, these items are indistinguishable from clothing any professional woman might wear to an office. Her lawyer argued they were elevated versions required for television. The judge responded, "Expensive is not the same as costume." Case closed. Though I'd argue $2,000 shoes are definitely costume level impractical. Claim 11 is beautifully creative. A Mary Kay consultant painted her house Pepto-Bismol pink and tried to write off 100% of her mortgage as advertising expense, arguing her home was a permanent billboard for the brand. The IRS acknowledged the house was indeed pink, very, very pink, but ruled that because she also lived there, it was primarily a residence. They offered to let her deduct the cost of the paint, just the paint. She'd spent $87,000 on the paint job for a custom shade. The deduction, $3,200. Her neighbors quote to local news, "At least now we know why it's so aggressively pink." Top 10 now, and they're all legendary. Number 10, a Canadian businessman tried to write off his divorce settlement, $2.3 million, as a business expense. His reasoning? The divorce was caused by work stress, therefore it's work-related. The CRA's response is my favorite tax document ever. Quote, "If we allowed deductions based on causation chains this tenuous, one could deduct breakfast because one needs energy to work." His appeal brief argued that his ex-wife contributed to the business. The judge noted, spousal contributions are addressed in family law, not the Income Tax Act. Deduction denied. The audacity to even try, though. Respect. At number 9, a tech CEO tried to write off his $12 million private jet 100% for business, claiming he needed to maximize productivity during travel. The IRS audit discovered his flight logs. In 1 year, 87 flights, 64 went to vacation destinations, 19 to his kids' college, 4 to actual business meetings. His defense? I think about business everywhere I go. Therefore, every flight is business travel. The tax court's response? Thinking about work while traveling to Maui for your anniversary does not transform a personal trip into a business expense. He was allowed to deduct 4.6% of the jet's costs. That's half of 1%. The remaining $11.4 million? Personal expense. Number 8. An adult entertainment reviewer, yes, that's apparently a job, tried to deduct $26,000 in adult website subscriptions and, quote, research materials. The ATO asked for proof this was genuinely for work. He provided, let's call them, detailed notes. The tribunal had to review these notes to determine if they constituted legitimate business records. Can you imagine being that judge? The ruling acknowledged his work was real, but noted, the volume of expenditure suggests personal benefit beyond professional necessity. They allowed $4,000. The judge's written statement included, "We will not detail the evidence that led to this conclusion. Some heroes don't wear capes." Lucky number 7. A British historical consultant purchased a partial medieval castle, an actual castle, for £800,000 and tried to write off the entire cost as necessary for authentic research. HMRC pointed out he lived in the castle. He argued that living historically was part of his research methodology. The tribunal asked, "Could you conduct your research visiting castles rather than owning one?" His response, "Not with the same immersive experience." The judge's ruling is legendary. The tax system distinguishes between necessary professional expenses and expensive lifestyle choices dressed in academic language. Deduction denied. The castle remains his. His tax bill also remains. Number 6. We're back to musical instruments, but this time it's a $35,000 Stradivarius violin that a software engineer tried to deduct as a stress relief device necessary for maintaining his productivity at work. His company offered yoga classes, meditation apps, and free therapy. He insisted only this specific $35,000 violin would suffice. The IRS was unconvinced. The tax court noted, while stress relief may enhance work performance, the taxpayer has not established why a $35,000 instrument is necessary versus a $500 violin or free employer-provided wellness programs. What's amazing is he genuinely seemed confused why this didn't work. The case notes include him saying, "But I do feel less stressed when I play it." We're in the top 5 now, and I promise you, these final 5 are absolutely worth waiting for. We've got a swimming pool for a cat, the most expensive single deduction attempt ever recorded, and number 1 is so beautifully stupid it almost deserves to be approved. But real quick, what's the dumbest thing you've tried to deduct? Be honest, no judgment, drop it in the comments. I read every single one. Number 5. A New Zealander built a $45,000 swimming pool and tried to write it off as a medical expense for their cat's arthritis hydrotherapy. The IRD requested veterinary documentation. The vet's note said, "Short swimming sessions in shallow water may help." They built an in-ground heated pool with a diving board. The IRD's response, "A plastic children's wading pool costs $20 and would serve the stated medical purpose." The taxpayer argued their cat deserved dignity. The IRD counter-argued that dignity doesn't change tax law. The best part? Photos submitted as evidence show the cat sitting beside the pool, refusing to go in. At number 4, a business owner paid his girlfriend $85,000 as a marketing consultant and tried to deduct it. The CRA investigated. Her qualifications? None. Her previous experience? Worked at Starbucks. Her actual work? According to emails the CRA subpoenaed, she sent him 3 Instagram posts and a Pinterest board. 3 Instagram posts for $85,000. The tribunal ruling noted, the taxpayer has failed to demonstrate that the services provided bear any reasonable relationship to the compensation paid. Translation, we know what you did there, and it's not deductible. He was also ordered to pay back taxes on the $85,000 as income to her, so she got taxed on it anyway. Congratulations, you played yourself. Bronze medal position, number 3. A day trader claimed 95% of his 6,000 square foot house as a home office deduction. 95%. That's everything except 1 bedroom and half a bathroom. The IRS audit discovered he had a home gym, a game room, a wine cellar, and a home theater. His argument? I monitor the markets from every room. The IRS asked for his daily schedule. According to his own testimony, he actively traded 3 to 4 hours a day. They asked what he did in the wine cellar while monitoring markets. He said, I enjoy wine while reviewing financial news. The tax court calculated that if he was working 4 hours a day in a 6,000 square foot house, even spread across all rooms, that's roughly 5% home office use, not 95%. They allowed him to deduct his actual office, 1 room. He lost $47,000 in deductions. Silver medal claim number 2. This is the most expensive rejected single deduction in modern tax history. A hedge fund manager tried to write off a £4.7 million year-long business development trip, that included 6 months on a super yacht in the Mediterranean, private tours of wineries in France, and 3 weeks at luxury ski resorts in Switzerland. His documentation? Business cards he'd collected. Just business cards. No meeting notes, no follow-up emails, no contracts, no clients gained. HMRC's investigation revealed his calendar showed personal appointments the entire year. The tribunal's ruling included, collecting business cards while on holiday does not transform leisure into work. He was required to pay back taxes on the full amount plus penalties, a total bill of over £6 million. That's a very expensive vacation. And here we are. Number 1. The dumbest tax deduction claim ever made. In 2003, a Montana rancher bought an American buffalo, a 2,000-pound buffalo, and tried to write it off as a lawn maintenance device. His logic? The buffalo eats grass, therefore it's a lawnmower. The IRS pointed out that lawnmowers cost $300, not $5,000, and don't require veterinary care, special fencing, or liability insurance. He argued it was more environmentally friendly than a gas mower. The IRS countered with photos from his property showing the buffalo had destroyed his lawn, not maintained it. The tax court ruling is perfect. The creature in question cannot be reasonably classified as a lawn maintenance device. It is a buffalo. But here's why this is number 1. He appealed. Twice. His final argument? In the 1800s, buffalo were used to manage grasslands. The appellate judge responded, in the 1800s, many things occurred that do not justify modern tax deductions. Case permanently closed. The buffalo's name was Theodore. Theodore, the tax-deductible lawnmower buffalo. The man paid more in legal fees appealing this deduction than the buffalo cost. And that, ladies and gentlemen, is why this is the greatest tax deduction fail in recorded history. So there you have it. 30 real people who looked at tax law and said, I can work with this. From Princess the Pomeranian security guard to Theodore the buffalo lawnmower, these legends prove that creativity and common sense don't always go hand in hand. Here's the thing though, every single one of these people genuinely believed their deduction made sense. They hired lawyers, they went to court, they appealed. That's the real lesson here. Confidence without knowledge is just expensive. Now I've got a challenge for you. I want you to do 3 things. First, tell me in the comments which claim was the absolute dumbest. Was it number 1, Theodore the buffalo, the yacht theology studies at 14, or maybe the girlfriend dependent that we saw earlier? Cast your vote. Second, share this video with that one friend who's always trying to get creative with their taxes. They need to see what happens when creativity goes too far. Trust me, you're doing them a favor. And third, if you made it all the way to the end, you're clearly my kind of person. Hit that subscribe button because next week, I'm diving into the wildest insurance claims ever filed, including someone who tried to claim their house was damaged by a ghost, and another person who insured their mustache for $150,000. Yeah, it gets weirder. Thanks for watching, and remember, just because you can try to deduct something doesn't mean you should. Theodore would want you to remember that.